Hey guys, what's up? It's been it's been 2 weeks since I've last recorded a video. So we're back at the screen. It's been crazy, man. Markets have been pretty crazy. They've been all over the place, but there have been so many opportunities. I know many of you only trade crypto, and Bitcoin has been doing absolutely nothing. So we may as well jump into Bitcoin immediately. One of the things I do like to trade is the tightening of the range, the tightening of price action. And I'm going to refrain from making inappropriate jokes, but this thing is looking pretty damn tight. This is very, very tight price action. And assuming this is going to stay this way, I think it'll break out of this lack of volatility and also lack of volume pretty aggressively. Obviously, I am hoping and positioning for that to be to the upside. So I have a buy stop order right above this high over here. I'm going to build into this position. So if I get a fill here and I am right on the trade and price starts trading up, hopefully it'll pause over here, which would make sense as it is going to be the third time at the range high of this range or this rectangle. So I do expect this to either pause or stall or consolidate right over there and not break right through. It could potentially do that. If it does, I'm not going to be chasing price because I'll have an entry over here, which will be good. However, if we do aggressively break out of the range and then retest the high of the range, I'll be looking to add at this price right over here. So those are the plans. That is the plan for Bitcoin right now. And as you can see, there's always different scenarios, right? And you plan for different outcomes. You don't plan for one thing, which most people do. Most people just they don't plan. They just hope for price to go up. So they buy and they hope price will go up eventually. And if it doesn't, they'll just buy more. Getting back to that subject again, and it's going to be the last time I mention this probably, unless we get 1,000 more viewers, which I'll get back to as well in a few minutes. But imagine you have a clothing store, right? Imagine you have a shoe store, and you sell only 2 types of shoes, right? Just for the sake of argument. And you sell red shoes and you sell blue shoes, right? And all your customers, everybody who comes to the store buys the blue shoes, right? And they go out of stock, so you restock, and people just keep buying the blue shoes. So you're stuck with the red shoes, right? So what do? You put them on discount, 10%, 20%, 30%. People are not buying the damn red shoes. So you start wondering what's wrong with the red shoes, right? And what do I do with them? One thing you don't do, most likely, assuming you have any kind of business feel, business sense, what you don't do is buy more red shoes, right? You don't stock up on stuff that doesn't sell, that doesn't interest people. And if you ask people this question, everybody will answer the same way. Obviously, I'm not going to stock up on shoes that don't sell. But why do you treat stocks and crypto differently, right? I mean, obviously there is a different. It is kind of a reductionist question, right? I'm pretending they are actually the same, literally the same, while they are clearly not. But in general, it is a good comparison to make. The reason why they differ is because, well, you could argue that stocks, or maybe even some crypto, but let's not get into that too much. Let's stick to stocks. You could argue why stocks are objectively underpriced, right? You can look at a company's financials, you can see a company is doing well financially, and therefore the stock is underpriced and should increase. You could make that argument, but price markets don't care about your opinion, right? They don't care about your opinion at all. People are wrong. Opinions are wrong. Markets are almost always right, and in that sense, they are kind of efficient. I don't believe in the efficient market hypothesis at all, but there are some elements of markets that are efficient, and that is one of them. So if price is going down and prices keep going down, that is because more sellers are stepping up to the plate and buyers are not. And that can have 1,000 different reasons, right? You can be absolutely in love with the crypto you hold and the stocks you buy. You need more buyers than sellers. You need an outcome, a future outcome that positively influences your stock price. Because markets are a discounting mechanism, right? They are forward looking. So if prices of a stock go up, or prices of a crypto go up, that means people are imagining a future where prices of a certain asset should be so and so, based on that idea of the future. It doesn't reflect, not always, the current state of affairs. And in that case, it is speculation for a reason. But my point is, after this fucking endless monologue, is that you need to stop buying that. You need to stop buying stuff that goes down just because it is going down, and therefore you think it is cheap. Because alts have been, annihilated. Alts have been decimated, and there's just always going to be bottom fishers. And as long as you think stuff has to go back up, as long as sentiment around you is that stuff has to go up for whatever reason, that is usually a classic sign that the bottom is not in. When people are really, really bearish and people just think, I'm just going to wait now. I've been buying all the way down, but what I'm going to do now is wait for another 50% drop. When that becomes sentiment, that is when markets bottom. That is when markets bottom. And I think one of the most important skills you can develop is getting a feel of market sentiment. And I think one of the easiest way to do that is to be involved in online discussions, message boards, social media platforms. Just keep your finger on the pulse of the market. And while looking at price and looking at charts is very helpful, especially if you're trading classical chart patterns like I do, if you're a technical analyst in general, you're going to need to develop those skills. But yeah, like I just said, altcoins have been destroyed. You can keep buying on the way down. But I mean, most altcoins have gone down, anywhere between 70 and 99%, right? So if you're looking to bottom fish, I would say don't. But if you do, look for actual bottoming structures, right? You can take a chart like 1 inch, for example, right? There's this huge range where we've tapped the bottom of the range and we have closed with a hammer at the lows, which is pretty bullish, but I'm waiting for price to close above the high of the hammer, right? So 1 inch would be an example. If you look at layer 0, it's trying to get back into this range, which it hasn't done so yet. I would also look at strength, right? Ripple has been pretty strong. It has gone down quite a lot, almost 50%, but it has bounced very, very, very aggressively. It's bounced over 50% already. So that is strength. So once liquidity comes back into these crypto markets, once risk is back on, once risk appetite is back on. So what you never want to do is buy stuff that has gone down the most, thinking that'll bounce the hardest. That is ridiculous, amateuristic thinking. And I want to sound arrogant or better than you, because I'm absolutely not, but that thinking will get you destroyed in markets. There is a time and a place for buying weakness, especially if that is your forte, if that is your strong suit, if that is your strategy, if you've done so successfully in the past, meaning you probably have some sort of skill for recognizing value. But if you're just buying random stuff, if you're not a professional, if this is your first cycle, maybe even your second cycle, don't buy the stuff that has gone down the most. Buy the stuff that is showing the most strength. So yeah, like I said, markets have been really, really intense. If you look at my priority list, which are the markets I'm currently tracking, which are markets in which I have open orders, and are just markets I generally watch on a daily basis. That list is pretty long right now. My edge, my strategy is dependent on exposure to a lot of markets, because I usually trade the daily and the weekly, meaning patterns on the daily or the weekly charts. So that means, I can't trade one market. If I trade one market, I could take 2 trades a year, which would be nice if I had $1 billion, right? And if I could take a trade or 2 a year, net 20% on that trade, that'd be pretty good. But I don't have $1 billion, so I'm stuck with this. In any case, let's go over a few open trades I'm currently in. As I've posted on Twitter, I think it was last week, either this week or last week, I don't know. I think China and I think Hong Kong are in the process of putting in major bottoms. They have gone through a bear market that have lasted 4 years, which is a long time. That is a long time to be in a bear market. And I think they are currently forming a bottom. I think they have potentially already put that bottom in. And they are breaking out of interesting structures. The China index hasn't done so yet. But if you look at the Hong Kong index, Hong Kong 50, which is also a trade I am in, it's a very interesting chart because, as you can see, the top was in 2021. We've gone down for 2 years, put in a dead cat bounce, a good 3-4 months later, and then just down all the way for a year straight. Now we're bouncing back up pretty aggressively, as you can see here. 2-3 weeks of aggressive upwards price action. Now what I'm doing is, and I usually don't, is I'm ignoring this price action because this was a lot of emotional buying, a lot of possible short covering. This was emotional. I'm treating this as a deviation. I know some traders like to call everything a deviation. I'm not that kind of guy. This is probably the first time I've ever mentioned this, but this is an actual deviation to me. Just as a side note, what a lot of people do is they will say, well, this is the range, and then they'll call this a deviation, right? It's not a deviation. It is still part of the pattern, but markets aren't perfect, right? It's not architecture. So you're always going to get movement that is out of bounds. And just because it is out of bounds doesn't mean it is a deviation. I think a deviation is when like fear or panic hits the market, or euphoria hits the market, like a blow off top, right? Stuff like that. That is what I call a deviation. In any case, this is a very nice rectangle pattern. Once we broke out of the pattern, I got long on the Hong Kong index. but what makes this interesting is that individual stocks will obviously do better, will do much better if the general index is also in an uptrend. So if you're buying stocks on any index, always check. At least that's what I would recommend. Always check the general index, because stocks would just do better if the general index is going up as well. In any case, the reason I think China will do well, Hong Kong will do well. You cannot trade mainland China stocks as an individual investor living in another country than China. So the next best thing is going to be to buy Hong Kong stocks. And they're just doing really well. Obviously, Alibaba is also listed on the New York Stock Exchange. Many companies that are listed on the Hong Kong Stock Exchange are also listed on the NASDAQ Stock Exchange. So you can just take your pick. Price action is the same, pretty much identical on both. There's advantages and disadvantages for trading either one of them. Usually the charts on the NASDAQ, the NASDAQ markets have better liquidity, but that is only relevant if you're trading hundreds of thousands of shares at a time. I don't. But yeah, there's obviously China and fundamentals and economics are obviously not my strong suit, but you don't have to be a genius to see where China has gone, what they've accomplished the last few years. I think America, and this is getting kind of political, and I'm trying to stay away from that, but I think America has been slowly dying from within the last few years, and so has Europe. Europe more than the United States of America. Europe has done absolutely nothing when it comes to stuff like AI. All they've done is try to regulate it, and they haven't really done anything with regards to innovation. China definitely has. China obviously has as many economic problems. They have a huge real estate problem, but people in China are better equipped, better able to spend more money on different things than housing and food, because a lot of stuff in China isn't ridiculously overpriced like in many big European and American cities. They've also obviously entered the race for AI innovation, and whether DeepSeek is or isn't what they say that it is, which is always the question when it comes to China. I think the fact that they've publicly entered the race is very interesting. I think if there is a country that has the ability to become the next world superpower, it is going to be China. It obviously isn't going to be fucking France or Italy or the Netherlands, right? They are pretty much irrelevant on the world stage. Unfortunately, Germany has become so as well, which is too bad, as it used to be the actual engine of Europe, the continent where I'm obviously from. But yeah, all that leads me to believe, and I've kept it quite concise, obviously, leads me to believe that Chinese stocks are where it's at right now. But the technicals have to align for me, which it did on this Alibaba chart. I knew I wanted this to break out of this structure, out of this symmetrical triangle. But that doesn't mean that I'm not going to be looking for opportunities before it does. And that opportunity was given to me because we have a flag over here. There, you can call it a tight flag, a continuation flag. You know, you can call it whatever you want. But it is a very brief, very short continuation pattern. Price goes up quite aggressively over here within a few days. Goes up 30%. Which makes this really relevant, which makes this interesting to watch. If this goes up 8% or something, right? 10%. It's not enough to make me want to wait for a consolidation before I get into the trade. Now, there's two reasons why I've entered this. One, because it is simply a continuation trade. But the second thing is it tightens up, and volume just really dries up, right? So what did I do? I put in a buy stop order at 103.67. Price crosses the level. Luckily, it could have gapped up, obviously, which it does sometimes, which wouldn't have given me a fill. It doesn't gap up. It hits my price, and we're on the right side of the trade pretty quickly. So that is really good. We're up on this 20%, slightly over 20%, and I have added on a retest of this level right here, which I did last Friday, right over here. So now we have a 100% position on, which doesn't happen a lot. My target is way higher. My target is between 180 and 200. So I'm holding this trade, and I'm going to see if I can add a little more to the trade as we go along. I am long the S&P 500, on futures, the March contract. Same thing. We get a rectangle consolidation pattern. You could even consider this a inverse head and shoulder, which is also a continuation pattern after a long uptrend. We get a consolidation, sideways price action, and I'm waiting for this to break out to the upside. I've already started a position once we broke through this little consolidation over here. So I got long on the close here. Now I'm waiting, kind of the same as Bitcoin. The reason I like this less than the Bitcoin one is because Bitcoin is really tightening up, which usually, almost always, leads to very aggressive moves. But yeah, this isn't as tight as Bitcoin is, but it's still the same structure, same rectangle. So I'm playing this the same way. If we break up, retest, I'll add to the position and close around 6,435. You can obviously trade this with any broker. You don't have to trade futures. You can just use the S&P 500 ticker. You can use every single ETF that trades, that your broker offers. Every product, it just looks kind of the same, right? There's always little differences, especially with specific future contracts. But yeah, if you're looking to copy this trade, you can obviously do so. Hong Kong, I've been over this trade already. Just a really nice looking trade. I will probably try and add to this trade as well. This level here is an important one. It is both the kind of the high of the deviation, but it is a huge swing high over here. This level is very important. As price traded up into that high, which is a huge move of over 55% on an index, which is crazy. Although it has taken quite a long time. Yeah, it took a while. A few months of price action, and then price moves away from this high again. So this makes this a very important swing high. And it was also support here, and here. So this is a big support resistance level. If the weekly closes above here, I am gonna go balls deep on this trade. Yeah, for sure. I'm also long Canadian dollar. Let me open up a better chart. So yeah, as you know, I've been long Canadian dollar for a while. And this was a great trade, although I was stopped out before it did eventually hit target. This to me, I mean, look at this range, right? This range is ridiculous. This high started in January 2016. And it is now here February 2025. So that is a very, very long rectangle to form. But then if you look at the weekly, we tag the high, we close back within the range, and the weekly candle is also a shooting star, kind of. Ideally, the candle body is smaller than it currently is. This right here is almost 50% of the entire candle, which doesn't really make it a shooting star, but that kind of depends. I mean, that's objective, right? Everybody, if you ask 10 traders to identify a shooting star, you'll probably get 10 different opinions, but they'll be kind of the same. So I think this will fall into the category of shooting star, especially considering the context, the placement of the position of the shooting star or of the candle. And then the week after, we just we close below the low of this rejection candle here. So I got long. I got actually short on this chart, but long on the other one during the capitulation over here, and I added to the trade after we broke through this low here, which is the high on the other chart, right? Which I'm long on, which is also kind of a rectangle forming, and this would be a huge deviation again. So this would be my first target. But if we, the reason this trade also works is because this candle was formed because of the tariff panic. And this is what makes these markets very hard to trade, right? Trump could literally say anything at any time, and every single trade will show you a loss within like a day. So a lot of traders, a lot of funds, they are not carrying overnight risk anymore, and especially they don't carry on weekend risk anymore. If you do, and I do as well, please do keep in mind that things can change like that. If you're trading crypto, I mean, markets are open 24/7, so you can just cut your positions immediately. But if you're trading stocks, if you're trading markets that close and there's news after hours, I mean, you're going to open up and you're going to be fucking killed. So yeah, keep that in mind. Then we have dollar Swedish krona. I'm probably butchering that pronunciation, but that'll just have to do. This is a very nice topping pattern. I got short at the break, and I'm looking to add to this trade if we get a retest of this low here. Ideally, we don't get it. I mean, I would like to add to the trade, but I would prefer a different pattern to emerge somewhere along the middle, and that to break for me to add. Because if I'm long, right, what a lot of people do, but what a lot of people forget, and I've said this many times also on Twitter, the very best breakouts just go, right? I mean, imagine you're trading this right here. Just for argument's sake, you're trading this pattern, and you're like, look, if price breaks through these highs here, I want to be a buyer, and I'm going to go long. Price just goes up, right? Day after day after day after day after day. It does not give you a pullback. It does not give you a good buying opportunity. Those are good, and this isn't an actual breakout, but I'm just trying to make a point here, for God's sake. So good, the best breakouts just go. And if it is a breakout that pulls back, you immediately know it is not a perfect breakout, which should put you on heightened awareness. Obviously, you only want to buy perfect breakouts. But again, if it's not, just be aware that it isn't. It doesn't mean you should close the position. It doesn't mean you should have the tightest stops on the planet. It just means you should be aware of it not being perfect. And I'm not saying that a perfect breakout is just a straight candle down, right? I mean, that is fantasy land. But if price moves away from your entry and you're in the trade, which is good, but then pulls back really, really aggressively, or pulls back a lot, Obviously, you're going to get the retest. Obviously, you're going to get a first or second opportunity to buy or sell, in this case with a short. I would prefer to always, when I'm in a short, always sell at a lower price. And when I'm in a long, every time I buy, I prefer price to be higher than my initial buy. So even if I'm trading an actual breakout, right? Like let's say we take this stock right here. Let's say my initial buy is let's say it's even here. Every single buy that I do, I want it to be higher than my first one. I don't want it to come back so I can add lower. I don't want that. I mean, it's nice when it works, but the odds of it not working are much greater than if it just doesn't pull back. So I want to short this market. Yeah. I want to short Euro, British Pound, because we have a huge rectangle forming. And prices sellers are just stepping in at lower and lower and lower and lower prices. This usually means really bad news, especially if you have support at the same levels. It's really annoying, by the way, right? That I'm drawing in yellow while all my markings are in orange. So let me just change that real quick to purple. Kind of makes more sense. So yeah, the lows are the same, right? And the highs are just here. They're just dying. It's the ping pong ball effect, right? The bounce is lower and lower and lower and lower every time. So chances of this breaking down are pretty big. So if we get a daily close, although I'm on the weekly chart, I'm waiting for a daily close below 82. I am going to be a seller of this market for sure, with a target of, that's a huge target, but things can go pretty crazy in these markets as well. 12.5% on a forex pair is pretty intense, but it can happen. But this will obviously take weeks, if not months, if not years to get there, if it even does. But it is a trade I'm currently looking at. Then we got the euro yen. I've gone over this trade many times already. Still waiting for this to happen. It did obviously close through the trend line, which I wanted it to, and it also closed below this horizontal level as well. But it was a bear trap. I didn't go short, and I'm just waiting for it to close below the most recent low right over here, and then consider going short. Yeah, I am in this trade already, as you know. Aussie dollar is also looking really nice. I am looking for it to re-enter this big symmetrical triangle, because if it can, it'll give us a good potential target to work with. But it does seem like it is one of the stronger currencies, which is why I'm waiting for this horizontal trend line to break out and then go back into the symmetrical triangle and then position long. Bitcoin I have covered. I'm not going to go over all these markets, guys, because this is insane. I mean, I'm watching so many freaking trades, right? Look at the Nasdaq as well, starting to look pretty good. I have started buying STRDY like an hour ago. This candle right over here, which, as you can see, is showing signs of buyers stepping in. 12%, almost 11% up on this buy. But don't get me started on what can happen in these crypto markets. The reason I wanted to be a buyer of STRDY, as I've said before on Twitter as well, I've sold this publicly months ago. But the reason I really like, fucking, oh no, we got purple on the screen as well. So in any case, I do consider this to be a trend channel, which it did not break out of, not on the downside and on the upside. And that one happened here on Friday. It really broke out of this channel. Not only that, it also broke through this horizontal swing high, and it broke out of the converging moving averages, and the most important one being the 200-day moving average. Said it before, I'll say it again. In general, obviously not always, and things can reverse pretty quickly, but in general, if price trades above the 200-day moving average on any market, you want to be looking for longs, and if price trades below the 200-day moving average, you want to be looking for shorts. That is, generally speaking, your best bet. You can obviously take counter trend trades. I'm not saying you can. I'm just giving you very general recommendations. So yeah, my first buy was hit. Ideally, and in this case, I do kind of want this to break down and fill. God, I want to say fill me up at this level. But that sounds pretty gay, which I have no issues with whatsoever. But I am not, and I don't prefer to get filled up. But I do prefer to have my orders filled. So yeah, looking for this second buy to get hit as well. When I'm trading altcoins, I usually just go with market sentiment. I think it is one of my better skills. I think I do have a good feel for general market sentiment. I do think I have a pretty good feel for tops and bottoms. Again, a homosexual remark, but that is okay. So what I mean by that is, as long as we are not in a euphoric environment, I'm just going to be holding these positions because I think they are very good entries. And I think this coin, this project, this asset, whatever, is fundamentally sound. And I think technically it looks really good as well. So there is no reason for me to sell this unless I get a reason to sell it. And one of those reasons in crypto is just, overly bullish sentiment, which we are worlds away removed from. Yeah, I'm in a lot of stocks as well right now. I bought Geely. That is the company of Link & Co. Link & Co. is just, especially in Holland, I'm not sure if it's the same case in the rest of Europe, but Link & Co. is just, they are just mass producing cars. You see them everywhere. The new models are looking incredibly good. China is absolutely fucking killing the EV space. So I just figured, I had to be an owner of this stock. And there's a lot of stocks that they just look really good. You can obviously go over all these stocks yourself. There are a few stocks that are just skyrocketing on news with regards to, look at the volume coming in here, right? It's absolutely insane. It's just news that companies are pairing up with DeepSeek. So I do think that, look at this chart, right? This isn't a crypto chart. Look at this chart. You're thinking this company is fucking dead, right? There's nothing's ever going to happen again to this chart. But then you get news, then you get crazy volume coming in a single week. Price shoots up over 50% in this week, but we reject at a pretty important weekly level. But if this closes through this level, I'm obviously going to buy this stock. I mean, if you're going to get the chance to be at the start of a possibly multi-year AI narrative in China, then I think you should definitely get on board, right? You don't get those chances often. It might reverse, it might all be absolutely nothing. So don't go all in. Always have a stop loss, always apply proper risk management, etc., etc. But I think this is a very, very good buying opportunity. BYD, same thing as Lynk & Co. BYD makes beautiful, beautiful electric vehicles. I've started seeing them on the roads in Europe more as well. The chart broke out of this amazing rectangle. Unfortunately, I was only made aware of this chart today by my in-laws who are Chinese citizens. So unfortunately, I didn't get the perfect entry. I mean, if I had seen this chart, I would have 100% put in a buy stop at this level, because it is a beautiful cup, a rounded chart pattern into the previous swing high. So yeah, I am. Unfortunately, I missed this. So I'll see if I get to buy this, which I think I will. I mean, if we consider this a base, it's not a bottoming base, but it is a base. This is now the first week out of that base. If we get daily consolidation patterns forming, either triangles or just sideways price action with just like Bitcoin, right? With volume contracting, volatility contracting, and volume going down, then I will also be a buyer of this stock. So yeah, I want to finish with final thoughts with regards to this channel, with regards to making these videos. I really enjoy this. I enjoy doing this, but I'm doing it for like fucking 5 people, right? And I've said, and I've promised myself and my friends that I'm going to do this for at least a year, but it does take me a lot of time I don't really have. So I'm going to think about if I'm going to keep doing this the way I am currently doing it. I am considering to just creating a private group where I do private videos for a monthly fee, in which we go into actual trade plans with actual entries, actual risk management, actual stop losses, just everything, like the actual trades. Because what I found is that there's a small group of people who really appreciate it, or are really looking to become either part-time or full-time traders, or are at least respecting the fact that trading is a skill. It is a difficult skill. It is very complicated. It is a highly, possibly one of the most competitive industries on the planet. There are so many people trading. You're competing with smart people, rich people. It's not an easy game, and to spend a lot of time doing this. I don't mind that it's free. That I don't get anything out of it. But in general, people just want to hear what they want to buy and which altcoin they want to buy on YouTube. I mean. So if I'm going to do this, and I'm going to do it privately in some sort of group, it's probably going to be in the form of a membership. Maybe I'm even going to send out weekly reports, with like PDF files showing you charts, showing you trade explanation, trade ideas, and possibly combine that with videos. But I'm not sure what to do yet. So if you have any suggestions, if you have any recommendations, if you have any ideas, do let me know. I think I will continue doing this for a few more weeks, or at least a few more months, and reevaluate around summer, because there's a ton of YouTubers, man, and it is hard to get more eyes on the channel. Which is just something I don't really have time for right now, but I still enjoy helping that small group of people, right? So I'm gonna see how I'm gonna do that. So yeah, if you have not subscribed to this channel, and if you think and hope this channel is going to last, please do subscribe right now. Leave a comment if you can, and like the video. I think that is the least you can do. Yeah, I'm wishing you all a very pleasant week, and good trading. And I'll see you guys here back next week.